Hey everyone, Steve here from My Crypto World. Welcome back to today's discussion regarding the market and everything crypto. Today we're going to look at the market economics to see where we are on the cycles and to have a look at what's happened over the last couple of weeks as far as market sentiment goes. And then we're going to have a look at two stories, one regarding Bitcoin and its possible $1 million value. Following from that, we're going to have a look at the US economic cycle as it is right now. All that after this. Okay, so if we have a look at where the market heat map is at the moment, look, we're having a great day today. Everything is in the green. There's a few, obviously, reds, but very few and far between. Most of the market's looking fairly steady. It's not up by a great deal, only a couple of percent. Ethereum, though, is up 7%, which is always nice. But the majority of the market's up around about 2% on average, something like that anyway. If we go and have a look at the cryptocurrency, our price charts. Now, if you saw my video last week, you would have known that for the 7-day market, most of the cryptos were in a positive territory. That has changed this week. So the majority of them for the last 7 days now. So it's 7 days rolling. It doesn't sort of block each 7 day out. It's just whatever it is on a rolling 7 days. Most of those economics now show that many of the cryptos, except for Tether, which is a stable coin, is currently in the red. Now, that's despite some of the movements over the last 24 hours being very positive. As I just said earlier, XRP is up about 7%. It's just dropped back down to 6.5. Cardano's up 2%. Solana's up 7% in the last 24 hours. Polkadot is up, where were we? 3.8%. Polygon Matic is up 7%. And Uniswap is up 12%. So despite those gains that we've had in the last 24 hours, the total market sentiment for the last week on each individual crypto is currently a bit low. So now if we have a look at our trusty total market cap chart, we can see that not much has changed since we spoke last week. In fact, the market is really moving sideways against that $903 billion mark that's in place on the screen, which is this green line here. Now, in saying that, we've actually had some positive movement in the sense that the market has risen quite nicely since its low, which is back on the 18th of June. So if we just take a measuring stance from that, we can see that the market is actually up 26.3% from its recent low to its recent high. The good side of that is that the market has come back down a bit, but it's not as far down as what it has grown. So if we take the measurement and we move that backwards from its recent little high, it's only dropped down 15.57%. So that's a difference there of 10%. So the market is actually up 10% overall throughout this movement, this period here that's been moving. And again, that movement has just repeated itself again from its not recent low, but from this point here, we've moved back up pretty much about the same. Just on 17% there, and the market has come back down again. So we're actually channel trading at the moment, or that's what we would call it, where the market's moving sideways. There's kind of a equilibrium that happens between the buyers and the sellers. Some people think it's worth more, some people think it's worth less, and there's no real decision in the market as to where the market direction's going, which can be incredibly frustrating, as I've mentioned on this channel before. So a couple of stories to touch off with as well, just regarding the economic cycle that we're all going through at the moment. The first article relates to a market analyst who has come out and suggested that how a dot-com loop has Arthur Hayes claiming that a $1 million Bitcoin can happen. Even though it's currently trading, well, when this was written, it was currently trading below $20,000. It's up above that now. And this is due to a macroeconomic doom loop, which could lead it to skyrocket up to over $1 million. So the article goes on to say that the original crypto asset has dipped back under 20,000 and is down about 71% from its November 2021 $69,000 all-time high. Many pundits of various levels of professionalism seem to think that Bitcoin could head as low as $10,000. It's in US. And that's partly based on the grain of salt premise that what happens in the past may happen in the future, and that the previous bear market drawdowns sent the asset tumbling by about 80 to 85% from prior peaks, which brings the $10,000 into play. Now, I don't know that we're going to drop that low. I think the market is stronger now than what it was back then. So we'll see about that in time. But the article goes on to talk about what Hayes predicted in his Twitter post. And you can see the Twitter post here. It says the doom loop has begun. 1 USD equals 1 euro. Prepare yourselves, and Bitcoin equals $1 million. But please be patient. These things take time. And sharing the euro daily chart compared to the US dollar on Twitter yesterday, he claimed that a doom loop has begun in this landscape. And as we scroll down further through to the article, it says that Hayes' doom loop scenario sees the euro and US dollar both depreciating in favour of hard-saving commodities such as gold and Bitcoin, with central banks resorting to yield curve control amid out-of-control inflation. Elaborating further, Hayes wrote, "As gold succeeds, so will Bitcoin. So why would any central bank save in any Western fiat currency when the savings can be exploited arbitrarily and unilaterally by the operators of the digital fiat money networks?" Which is a really good question he's posed, to be honest with you. Why would you bank a fiat currency that is going to be stable and probably not have much growth, could go the other way, in fact, when you could put your money into something like gold or Bitcoin, which tends to outdo many other sectors in the market if you're looking to invest. The other one I want to talk about, the other article that's came out, is we're all talking doom and gloom around the globe. In Australia, we're talking recession, and that's certainly the premise that's been put out in the media, that we're in an economically slow period at the time, and inflation is going through the roof, and all around the world, interest rates are going sporadic, and they're jumping up quite a lot. But this article came out only a couple of days ago, and it was very interesting because I hadn't thought of it from this perspective. The US just goes on to say that the US is lacking a key aspect of any recession. Now, I focus on the US because generally speaking, what happens in the US does have a flutter effect around the world. The same thing that if China's economy slows, we also feel the pinch of that as well because they're the two largest economies on the planet. But in relation to the US, the article goes on to say, while the gross domestic product is a broad set measure of economic activity, the often cited identification of a recession is with 2 consecutive quarters of negative GDP growth. And it is not an official designation. The designation of a recession is a province of a committee of experts at the National Bureau of Economic Research, a private non-profit research organisation that focuses on understanding the US economy. So I've got to admit, I thought a recession myself was designated by 2 periods or 2 quarters of economic downturn, but apparently according to this that's not the case. If anyone knows any different, please let me know, because I take all of this sort of stuff that's on the internet with a grain of salt, because sometimes even reporters, good ones, can get things wrong. But anyway, that's what the article says. What was interesting though is how it explained why they're not in a recession at the moment and possibly may not even hit a recession, even though things are going backwards at the moment. That said, the exercise of defining recessions isn't very productive, and it's most likely semantics, as it's highly dependent on the metrics you decide to include and exclude and how you calculate this economic activity. So the big thing that's missing out of everything in the market at the moment is jobs growth in this economy. And the article goes on to say that while there have been signs of the job market has been cooling, it certainly does not reflect an economic recession. Total employment stood at 151 million, we'll just say 152 million to round it up, which is up 21 million from its low in April 2020. It's now just barely below its pre-pandemic level of 152.5 million in February 2020. So while the stock market has crumbled and economic activity has decelerated since the beginning of the year, the labour market has added 2.74 million jobs during the same period, with gains in every month. Now, here in Australia, that is exactly what's happening here. We are at a very low unemployment rate here. It came out yesterday, I think, and I think it was 3.2%, which is pretty low. So it goes on to say it remains near levels seen during periods of economic expansion. So it actually looks like we're in an expansion phase. We're half in an expansion phase and we're half in a recession phase at the moment. But if that's the case and the jobs market is growing really strongly, look, in Australia at the moment, we've probably got a lot of missing people in hospitality. We've got a lot of missing people in the childcare sector. Not that they're missing, we just don't have employment opportunities we haven't got enough people to cover the amount of jobs that we've got advertised over here in Australia. But what's interesting is, even though that's the case, the jobs market hasn't slowed down. People have just simply changed industries. And for usually, I would say on average, we're probably at about a 5% unemployment rate. For it to drop down to 3.2% means there has been massive job growth in Australia. So while the markets are plummeting, while the property market's in a doom cycle and the cryptos are falling out of the sky and dropping like flies, the jobs market is actually very, very healthy. And I have to agree with this article that normally a strong job market indicates not a recession, but a boom. So it'll be interesting to see where the market goes over the next coming months and weeks, and also where the job market's going to go. Does this mean that we're going to have less unemployment moving forward between now and, say, the end of the year? Or are things going to slow down very dramatically for the job market as well? Time will tell, that's for sure. Well, that's it for today's articles. So if you want to leave in your comments, please do so below. If you could like and subscribe to the page and to this channel, that would really help the channel grow, and I appreciate that a lot. Thanks so much. Have a great week, and we'll speak to you soon.